heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, Amazon, it posts a biggest cloud sales growth in a year. That's all on AI demand. Details to come.
Plus, full chip coverage ahead as AMD falls after its AI chip forecast disappoints.
And we sit down with the CEO of Pinterest for an exclusive interview as that revenue surges. But first, let's check in on the rest of these markets. And actually a little bit of nervousness, shall we say, ahead of the Fed. All-important 2 p.m., 2:30 is when, of course, Jay Powell comes forward with his press conference. We're down about 0.1%. We're bouncing off of our lows. But, of course, more broadly, technology dragged lower by some of those earnings in the chip names. And the read across, we're down by 2.5%, let's call it, on the stocks. I know, Ed, you'll be digging into really what are the ultimate names that are pulling down the key chip index. But I'm also looking at 10-year yield actually catching a bid. Now, earlier we saw bonds sell off. Now they're catching a bid because we see the US Treasury actually isn't going to be upping its supply in the coming quarter in terms of bond auctions. But notably, we have seen some worrying signs when it comes to economic data today, manufacturing in particular, seeing a slowdown, but the prices paid still on the upside. So we've got that issue of inflation, how much we are actually seeing a cooling or a steadying of the US economy. Remember, we actually saw some weaker jobs data today as well. Moving on, have a look at what's happening in terms of your individual movers. And from a crypto perspective, Ed, I'm looking at what's happening on the Bitcoin, down 4.3% on the day. We're now sub 60,000, $57,000 is where we currently trade. Maybe that's a macro picture, maybe that's a risk-off feel. What are you seeing on the micro?
Let's start with AMD. Actually, this is a big move lower in AMD, despite actually upgrading their forecast for sales of AI accelerators from $3.5 billion to $4 billion. The problem was high hopes. Some in the street seeing or hoping for guides of $8 billion. We're talking about the MI300X, which AMD is going to put out into the market to compete against NVIDIA, principally H200. But they also are seeing a slowdown in gaming. Old is new. Right, AMD is a name we used to talk about because you built your custom rig with an AMD GPU. You want to play high-performance games. We'll come back to that in just a moment with our analyst, Kunjan Sabani. And then Amazon. Amazon, actually, it's a kind of muted response. We're up 2.3%, strong first quarter, tepid outlook for sales in the second quarter. But the story is AWS. Annual revenue run rate of $100 billion. But the devil's in the detail, and it was just one sentence from Brian Olsavsky, the CFO. That generative AI revenue run rate in the multiple billions of dollars. And that seems to be enough to show that AI is actually starting to show up in the financials. Let's dig into Amazon's results after the company's cloud unit posted its strongest sales growth in a year with Bloomberg's Spencer Soper. Spencer, you were on that media call with Brian Olsavsky, and I think that's the focus here, isn't it? It's that AI is a real thing that makes real money, sort of.
Yeah, the profitability for AWS in the quarter was huge. It accounts for less than 20% of all Amazon revenue, but it's like 2/3 of its profit. So that was big. And then the question for the investors is, what's the pace of investment going to look like, and how are these margins going to look as Amazon continues to invest in new data centers to fuel this boom? And there was a little bit of just some breadcrumbs dropped. Amazon said it dropped about $14 billion in the first quarter on data centers, and it said that'll be the low point for the rest of the year. So they're probably looking at about north of $50 billion in data center investment, at least this year.
They nevertheless managed to support that operating margin. What was it? 37.6% wider since they started disclosing what it was and breaking out AWS. But the bread and butter that we all know Amazon for in many ways is the e-commerce play. And how is the consumer looking for them right now?
Yeah, that's where things were a little soft. The overall revenue guidance was a little light for the current quarter, and they said that consumers are definitely pinching their pennies. The average order size is smaller, and so that hurts the margins of the e-commerce business, because if you're shipping less expensive things, it still costs the same amount to process and ship those items. So the e-commerce outlook is good, just not nearly as good as AWS was, and they're definitely seeing some signs of consumer strain.
We've got the Pinterest CEO coming on a little bit later, and we're going to be asking a lot about advertising, and of course they've got a partnership with Amazon. How is Prime Ads looking? How is that particular part of this newer part of the business doing?
So their ad business is still strong. It's still predominantly the sponsored ads, things that you see on the actual website. There wasn't a lot of clarity about the contribution from the video ads that they've added. Analysts are estimating somewhere in the realm of, I think $5 billion was the last I saw for the year from that business. But it's there wasn't a lot of clarity on exactly what it's adding. And Amazon emphasized, look, we're going to be lighter on the advertising than most other programming, than television and that sort of thing. If you watch Prime Video, you'll see fewer advertisements. So they're definitely, moving delicately on that new revenue source.
Yeah, don't want to put us off of our watching. Spencer, it's so nice to have him here in New York. Spencer Soper on all things Amazon. Meanwhile, we are sticking on this earnings. Let's break down AMD. Look, it was giving a disappointing forecast in particular. There was sluggishness when it came to gaming demand. I want to bring in Bloomberg Intelligence senior analyst Kunjan Sabani. And Kunjan, it really seems to be Q2 everyone's slightly focusing in on because Q1 looked good.
Yeah, exactly. I mean, fundamentally, the story remains intact. It's that sentimentally, it didn't beat enough the high, lofty investor expectations, especially for the GPU numbers coming into the earnings. A second point is the rest of the non-AI business is growing through a persistent slump, which is weighing heavily on all the AI goodness. So overall, at the company level, actually, the EPS numbers for 24 and 24 came down a tad bit. That's not what you want to see from a AI flying high name.
I was trying to unpick what Lisa Su was saying. It seemed in the first instance she was saying AMD is supply constrained. In other words, there's great demand for the AI accelerator product. They just can't get enough of them. She later said in the call, actually, that's not the case. The full-year guide doesn't factor in any supply constraint. What is the story here with demand versus supply of the MI300X? Clarify.
From our perspective, the demand continues to run higher. It's just supply is not binary the way people think. So the second quarter supply is constrained. There will be more supply coming in 3Q and 4Q, and there's only so much they can ship on the second half of the year. And the second point to remember is there's all these crazy high expectation numbers coming from the buy side where people are going in and evaluating how much supply is coming in and multiplying that number based on how many units the AMD can ship. But that's not how it works. The supply, when it comes in, doesn't run on 100% utilization and yield and etc. So it's not a linear equation that you can extrapolate.
You hear that buy side? You got crazy high expectations. Even so, do we think that AMD gave enough evidence they will take market share from NVIDIA, which is so far ahead in the AI accelerator race?
We believe so. Look, they've showcased enough engagements, both at the cloud and the enterprise customer. And the second part is more important because the next wave of increasing CapEx is going to come from the enterprise customers, especially in the inference where the MI300 sort of has a more competitive positioning.
Bloomberg Intelligence senior analyst Kunjan Sabani, check out his research on the Bloomberg terminal. Let's keep the conversation going with Daniel O'Regan, Managing Director of Global Equities at Mizuho Americas. Let's start with AMD. Let's set a baseline that expectations were high, and we got a raised forecast, and it doesn't seem to have been good enough.
Yeah, precisely. I think your previous guest did an incredible job of outlining exactly what went down. Listen, results were great. They were tremendous. I think in any other tape, this name would be trading a little bit higher. I just think expectations got a little ahead of themselves. So she was very prudent last night, raising GPU guidance from $3.5 billion to $4 billion. Again, we heard that the buy side was looking for closer to 6, maybe even 7. Long story short is we're sticking with it. We like it down here. There are other levers to pull. Also, too, if you're a massive hyperscaler looking to secure as many chips as possible, you definitely want to diversify your offerings instead of just having all your chips in one basket with NVIDIA. You think there should be other people that supply your chips, and I think AMD probably fits that bill.
Can you go into the other levers that you just said that they have to pull? What in particular do you want to see pulled, Daniel?
That's a great question. So the gaming side was actually one lackluster area for next quarter, but I think more importantly going forward, there's potential for an enterprise refresh, especially on the back of COVID. A lot of Fortune 100, Fortune 500 companies have old legacy systems that they have to rip and replace. That could bode well for them in the second half of 2025 or even earlier 2025.
Okay, interesting. I want to pivot away, therefore, not just away from AMD, but more broadly looking at the cloud and some of those hyperscalers that you say are going to be the end demand for an AMD. Amazon today coming out looking really strong when it comes to its AWS, when it comes to its AI focus. Is more broadly that the lever that you want to see continuing to be pulled by Andy Jassy?
Yeah, so that conference call last night was one of the most bullish I've listened to really in years, maybe on the back of the Meta one from two quarters ago. Jassy basically said that this opportunity with AI is almost as tremendous as anything he's ever seen, and they're willing to spend tens of billions of dollars to reap the rewards later on, and they're not afraid to spend. And I wouldn't bet against these guys. We've literally seen it for 18 years. They identify massive technology, they invest aggressively, profits and margins get hit a little bit, but then later on, profitability hockey sticks as everybody comes to realize these guys are ahead of the curve. I think the same thing's going to happen with Amazon, and I also think the spending bodes very, very well for the supply chain names, for example, like the NVIDIAs and the AMDs of the world, because they're the arms providers for this AI race. So I think in general it's positive for the entire AI ecosystem.
Daniel, I'm interested in that thesis. You said it was the most bullish call from Andy Jassy and Brian Olsavsky you've heard in some time. Was it light on details, though? I mean, think about what you just said. The one thing we didn't hear is any sort of tangible number for CapEx, other than Brian saying it will be meaningfully higher in 2024.
Right. I think that's a great question. And I don't think they wanted to pigeonhole themselves with just specifically quantifying it. The fact that they used overwhelming or significant, I think that gave them room to kind of fall down later on. At the end of the day, they know that there's a massive opportunity. They're okay to spend aggressively to take advantage of that. One thing that I think that could be different this time is back in previous investment cycles, they didn't have as much profitability as they do now, right? Amazon has multiple mature businesses, right? It's not just retail. They have retail. They have AWS. Now they have advertising. They have logistics. They have all these other profitable businesses that I hope or think that could blunt the impact of profitability. And also, too, on the call, they reiterated over and over again that they think they can do both. They think they can be efficient, and they think they can drive growth at the same time. Let's see if they can thread the needle. But like I said earlier, I wouldn't bet against these guys.
If AWS is the cash cow and the bright spot for everyone, what's the next best thing in the multifaceted business, Daniel?
That's a great question. I really don't know. I think it's AWS for now. One area that was weaker last night in terms of guidance, I don't even think really matters. They said that the European consumer was lackluster, which hurt top line. I don't really talk to any investors that are concerned much about their European consumer business. So again, I think the focus is on AWS. But going a little deeper, the operating profit for the retail business was tremendous. Like, this was their bread and butter 10 years ago, and it's like they're growing past that now. And to AWS, I think it's just to Spencer's point earlier, it's just going to continue to drive the bottom line, and the entire ecosystem is just going to get better.
And meanwhile, they're not particularly articulating CapEx when it comes to the amount of spending, but what we can glean from Microsoft, from Amazon, from IBM, from anyone that's providing some sort of cloud offering is that they are spending, and they're spending big. What do we therefore worry about or be optimistic about when it comes to NVIDIA that's coming, or the other big chip names that need this sort of exuberance to suspend the market cap that we've continued to see?
You know, that's a great question. We kind of say that it's the trillion-dollar question, right? Is how many more quarters are these AI spenders going to get the hall pass from investors until, hey, show me the money, show me the ROI. If you spend tens of billions of dollars on this AI build-out, when are we going to get paid back? The jury's still out, right? We don't know exactly what's going to happen just yet. However, last night, Andy Jassy did say a few times that they're already seeing billions of dollars of AI-related revenue on AWS. So that's, I don't even want to say it's green shoots, but they're already making a good headway in that segment. And if you remember last week, we had amazing Azure numbers. Microsoft Azure actually accelerated year over year on a big number. Google Cloud obviously continues to do well. So we've now heard from 3 of the major cloud providers, 3 of the world's biggest hyperscalers come back with really tremendous results. It gets me pretty bulled up on space.
Daniel Regan, we thank you for being bulled up with us, Managing Director in Global Equities over at Mizuho Americas. Great to have some time with you. Meanwhile, coming up, well, not bulled up, Tesla cutting, in fact, its supercharger team in what could be a big hit to actually the overall EV ecosystem. Details from you, Ed, and all the people working with you in a minute.
Yeah, that's kept me busy. Quick look at Supermicro, down 18%. In the quarter, they did great, just below expectations, but this is a stock that's still up 150% year to date. It's a server maker at the heart of the AI story, and with high expectations can come big disappointment. That's the story. We'll be right back. This is Bloomberg Technology. Here's some news. Time for Talking Tech. Binance founder Changpeng Zhao was ordered to spend 4 months in prison for failures that allowed cyber criminals and terrorist groups to freely trade on the world's largest cryptocurrency exchange. The sentence was far below the 3 years requested by prosecutors who had sought to make an example out of Zhao to a heavily scrutinized industry which is rebounding, frankly, from a slew of high-profile scandals. Plus, Paramount Global agreed to extend contract renewal talks with Charter Communications. The owner of CBS and MTV is said to have extended talks with Charter, one of the largest cable TV providers, ahead of last night's deadline, preventing its channels from going dark on the cable service. And Tesla's pivotal partnership with Baidu in China may amount to a U-turn of sorts for Elon Musk. The Tesla CEO has long claimed his company can offer self-driving without HD maps. But in order to go to market with FSD in China, he had no choice but to join with a local partner for a mapping license, which was Baidu. Karen.
Oh, boy. Let's stick with Tesla, because there is so much news, which Ed, you and team have been breaking. The company actually eliminating almost its entire supercharger organization, which has built, you know, a vast network of public charging stations that basically every major automaker is in the process of trying to tap into in the United States. We've then had breaking news that, well, the head of HR is now stepping down. Bloomberg's Craig Trudell is with us. And Craig, let's just start on the supercharger element of this, because this has got a lot of, well, the auto industry worried. I'm not sure, of course, whether internally at Tesla they're pretty worried too.
I think it's incredible in part because, to Tesla's credit, this was a fantastic business that they built over more than a decade. I think, you know, you can sort of quibble with, you know, some of the promises made and promises not necessarily kept that Musk has offered over the years. But what this company has done is built a really solid and extensive, fast, reliable charging network. And you hear that, you know, from Tesla customers all over the place. You know, when they talk about why they love their cars so much, this is one of the sort of main, you know, positives that is often pointed to, is that, you know, when you're in need of a top up, Tesla has, you know, the charging network to support you. And so for them to, you know, make this sudden decision to get rid of, you know, roughly 500 people, including the head of this business, who they just put forward in front of investors a little over a year ago as, you know, an example of the deep bench they have behind Musk, really is leading to a lot of people scratching their heads.
Craig, I want to bring you some breaking news that's happened since you've sat in the chair. What I'm hearing and what I've reported just now with Dana Hull, Bloomberg's Dana Hull, is that Tesla's most senior HR executive, the senior director, Ali Araballo, has actually left the company. My suspicion is she was fired. But this is another example of a high-profile exec departure alongside a really big wave of layoffs. I know that you're aware of this story. Just give us your reaction.
I think it is very interesting that this makes it, you know, 2 in 2 days of major, you know, departures of senior women within this organization. I think it's a company that, you know, for the most part, when you do tune into these events that Tesla puts on, it is very much male-dominated. And I mentioned that Investor Day in March of last year, there were 16 executives who were trotted out along with Elon Musk. Only 2 of those executives were women. I also just think that, you know, this latest sort of drumbeat of news just really sort of speaks to this idea of, you know, as you reported, Ed, just last week, of chaos, right? It really seems like a chaotic moment for this company, where, you know, they're trying to sort of fix problems that they don't have and not addressing problems that they do have.
And there are many out there that would know Elon Musk, to their mind, knows what he's doing, and that Tesla will come through the other side. All we can do is report what's happening inside. Bloomberg's Craig Trudell, thank you very much. Now, coming up, Microsoft reveals it invested in OpenAI amid fears of falling behind Google in the race for AI dominance. We'll bring you that Bloomberg reporting next. Stick with us. This is Bloomberg Technology. Microsoft's motivation for investing heavily and partnering with OpenAI came from a sense of falling badly behind Google. That's according to an internal email released amid the Justice Department's antitrust case against the search giant. Joining us is Bloomberg's Mike Shepard out of D.C., leads the coverage of politics and tech. I love these investigations because I love the paper trail, and this was a pretty juicy one to get some details on.
Yes, this really was, and it provides yet another window, actually, specifically into the battle between the biggest tech companies over artificial intelligence. This is such an important and emerging area for them, and such a potentially lucrative one, too. We saw it show up in the earnings reports that tumbled in last week. Cloud revenue was up for Microsoft and Google, in part on AI services, and that helped their shares. So this is an area where they want to maintain an edge and advantage. However, it's also an area of focus for regulators and prosecutors here. It did happen to be mentioned in this antitrust case against Google, and this is where the Microsoft internal email emerged.
And interestingly, that it was news organizations that really pushed for this document in its redacted form to be published. Mike, we now have Thursday, Friday upon us. They're going to be the closing remarks, right, of this overall DOJ case against Alphabet.
Yes, that's right, Caroline. And my colleague, Leah Nyland, will be covering that very closely to see how this is going to end up. We won't have a ruling right away in the case, probably not until the summertime here. But this is one that we're watching very closely because it is part of a series of moves by the FTC and the Justice Department, which is handling this case, against the largest tech companies, questioning whether they are engaging in anti-competitive practices. And they're looking at them on a series of fronts. When it comes to artificial intelligence specifically, they're concerned that they're trying to hoover up or get involved with or lock in relationships with these startups like OpenAI, like DeepMind, in a way that preserves their market dominance. And they're also worried about these interlocking directorships, too, among these AI startups as well.
UK CMA, keen eye too. Mike Shepard, just so on the nose when it comes to Washington. We thank you so much. And sticking with AI, and actually with Alphabet, well, Dan Loeb's third point actually really likes Alphabet. And in fact, he's saying nearly half of its equity portfolio in artificial intelligence-related companies now exists. In a letter to investors, the hedge fund's billionaire founder and CEO said that the AI revolution favors incumbents who are deploying their skills in this arms race. Ed, what have we got coming up?
More earnings. Going to talk Pinterest. Big move higher. Bit of a surprise, this one. This is Bloomberg. Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco.
Caroline Hyde in New York. Ed, let's just get a quick check on these markets because it's a macro day, it's a Fed day, and we are therefore perhaps a little bit of cautious trading ahead of that all-important 2 p.m. then 2:30 p.m. press conference with Fed Chair Powell. We're looking at the Nasdaq currently down some 0.6%. That in large part is the chips that continue to fall. We'll dig into in a moment why. I'm looking at a 10-year yield that actually catches a bid. That's as the US Treasury says, look, we're not going to be increasing the pace of our auctions in the following quarters. So we're seeing supply side playing to that. We're down some 2 basis points, even though we are still looking at the Fed. I'm looking at what's happening on Bitcoin. Look, some of this anxiety, some of this risk coming off the table, some of the ETFs slowing in terms of net inflows, it's just pulling us down by almost 5%. We're a little below that now below $57,000 mark when it comes to Bitcoin. Move on. Some of the individual movers. Now, I talked and I pushed ahead to the fact that the chip stocks are really underwater today. Why? AMD. Look, we did see that tepid forecast. The market wanted to see more when it comes to the MI300s in terms of their AI focus. And, well, it's hitting across some of the other big chip names. So we're off by almost 9%, let's call it, on AMD. I'm looking at Amazon, though, managing to post what is strongest quarter for AWS growth that we've seen in several years, or at least in a year. We're seeing $25 billion being brought in. We're seeing overall still that growth of 1.7%, managing to be a relief when it comes to Amazon and strong AI focus, multi-billion-dollar revenue run rate. And then we have Pinterest. We're up 21% on the day, Ed. This is the best day since October 2020 for this social media name. And we've finally got back to this revenue run rate in excess of 20% growth. We're seeing a focus on Gen Z. We're seeing a focus on shoppability. We're seeing a management managing to build momentum, so say the analysts. And well, we're going to be digging into it in a moment.
I mean, that is a big move. I did not have Pinterest on my earnings bingo card. So let's dive deeper into Pinterest and those first quarter sales, user growth. with Pinterest CEO Bill Reddy. Bill, terrific to have you on the program. The story seems quite clear. Pinterest pushing into shopping and Pinterest focusing on Gen Z users, right? My question to start, what is the relationship in the activity between the shopping and the Gen Z users?
Yeah, so we're finding our best product market fit in years. We've hit an all-time high with users, more than 500 million users, and as you noted, Gen Z is our largest demographic. It's now more than 40% of our platform, and it's our fastest growing demographic as well. And at the core of that growth with Gen Z has been the rising actionability in the platform. Pinterest is where Gen Z goes to shop. And as we've made Pinterest more actionable so that people can get to more of the things they're finding on Pinterest, we're seeing that work really well for users, where we've accelerated user growth for 7 straight quarters now. But it's also cutting through for advertisers, where, as you noted, revenue grew 23% this quarter, nearly doubling our revenue growth rate from last quarter. And so we're really seeing this be quite synergistic between users finding the things that they love on Pinterest and then advertisers finding this a great place for them to meet users that are in market looking to shop and buy.
And let's just talk about some of the synergies that you've managed to bring to bear with Amazon, with Google, with those ad partnerships, Bill. How much of that advertising uptick is thanks to these third parties?
Well, on the shoppability front, historically Pinterest had solved digital window shopping, but it was hard to get to the things that you found on Pinterest. We have opened the stores, and in doing that, we're seeing that retailers broadly are finding great performance on Pinterest. At the core of our revenue acceleration has been our strength in low funnel actionability, users that are clicking and buying. We more than doubled the number of clicks we sent to advertisers in Q4, and we did it again in Q1. That is broad-based, but we are seeing our best strength with the largest, most sophisticated retailers that provide really great buying experiences. We're quite pleased with that. And we also see that the third-party demand that we've brought onto the platform is doing exactly what it was intended to do, which is rounding out gaps in our auction and bringing more great, shoppable, buyable content onto Pinterest so that when users find what they're looking for on Pinterest, they can easily click and buy it.
This was a milestone quarter in the sense that global monthly users passed 500 million for the first time. You've put a lot of emphasis on Gen Z. So look forward. What is the arc of user growth and what drives it? What brings in new users to your platform, Bill?
Yeah, so as I mentioned, this is our 7th consecutive quarter of accelerating user growth. We've accelerated in every geography and with every generation that we track. Gen Z is our fastest growing and our largest, but you have millennials right behind that. So our improvement in the product has been broad-based, and it is that actionability at the core. But I would say we are just getting going with that. We see much more building momentum in that as we look forward. And it's both the actionability as well as the positivity that we're bringing into it. We've made tremendous strides with AI. And the AI is bringing more relevant recommendations for users so they can take action on more of what they find. But it's also the case that we're tuning AI for positivity. We're tuning it to help users feel better, not just in finding what they're looking to shop and buy, but in making sure that we're bringing inspirational content to them. So we've done things like inclusive AI, where we have skin tone filters, so people can filter for things that will reflect them, and including diversity by default in our feeds. We introduced body type AI, where people can select body types so that they can find more things that fit well for them. And so we want to make it so that every person on Pinterest can see themselves on Pinterest. And so that's really leading to great strides in both the relevance, the representation, and in just people feeling positive when they spend time on Pinterest.
Bill, last night on the Amazon media call, Brian Olszewski was asked about Temu and Shein in the context of competition. With you guys at Pinterest, a little bit different. Would you talk about Temu and Shein as potential partners? Are you seeing any uplift from Chinese advertisers?
So APAC cross-border has been a contributor to our growth, but it's a nice contributor. It's not overwhelming, but it's a nice contributor. But as I mentioned before, our strength in retail has been broad-based. Retailers of all sizes are finding strength on Pinterest. And it's because they're seeing that doubling of clicks that we sent to advertisers year on year in Q4 and again in Q1. And it's also because they're able to meet hard-to-find shoppers like Gen Z on Pinterest. And they're meeting those shoppers in a really unique moment because users come to Pinterest when they have clear intent. More than half the users on the platform are here to shop, but they haven't yet decided what to buy. So they're not necessarily searching for a specific brand or a specific item where maybe the decision's already made. They're coming here with much more general thoughts like cool outfits for spring, what to wear to Coachella. And those are great moments for advertisers to meet users because the user has clear intent but hasn't decided yet what to buy. And again, we're seeing that broad-based across retailers. China cross-border is a contributor, but it's broad-based strength with retailers.
Focusing a little bit more on China for a moment, Bill. I mean, this is a unique time in social media more broadly because it looks as though one of a key social media player might be falling away. Do you think more Gen Z will come to you because of TikTok potentially being banned completely, no longer existing in the US?
Well, when you look at why we are doing so well with Gen Z, it is because we are doing something very different than the rest of social media for Gen Z. Most of social media has the user in a lean back entertainment mode. We have the user in a lean forward mode with intent and purpose. And I mentioned tuning for positivity. You know, Gen Z sees Pinterest as an oasis away from the toxicity that they experience on much of the rest of social media. They know that social media has largely become comparative and performative. Yeah. And if you go talk to Gen Z about why they spend time on Pinterest, they'll say they go to other places on social media and see what others want them to be, what others expect them to be. And then go to Pinterest to discover what they want to be and invest in themselves with a small circle of friends. So that's already winning with Gen Z, and we're not sitting around hoping for the demise of other platforms. We're just busy building something that makes people feel more positive, is going to give them a great experience, and that's winning, particularly with Gen Z.
Okay, so no clear ambition to capitalize on the uncertainty, but clearly seeing the flow of Gen Z. What really always interests me, Bill, is when you break down your numbers in terms of average users and where they are. You're so dominant in the rest of the world. Do you see US as the area of growth? Do you see internationally more the area of growth? Where do you see the expansion?
So it's a great question. As you noted, we have approximately 80% or more of our users outside the U.S., but only approximately 20% of our revenue outside the U.S. So the improvements we've made from the user perspective have been broad-based. As I mentioned, we've accelerated users across every geography. On the monetization side, we are much further along in the US, and we are now starting to deploy those things internationally. And so we see international as a huge growth vector for us, both in terms of what we will bring to advertisers directly, where we do first-party selling, as well as where we're bringing in new sources of demand, either through third-party demand, like what we're doing with our Google partnership in international markets, or what we're now doing with resellers in international markets, where they can bring more local demand, which is going to be great for those advertisers, but also great for users that will find more shoppable content as more of those advertisers, those international markets come onto our platform.
Bill, great to catch up with you. Thanks for spending some time with us
this
morning. Pinterest CEO, Bill Ready there. Meanwhile, coming up, that we're going to be joined by Renegade Partners co-founder Roseanne Winsek about the firm's new fund. They've raised a lot. Where are they spending it? This is Bloomberg Technology. So, Palantir CEO Alex Karp, Sequoia's leader, that's Roloff Botha, and venture capitalist Vinod Khosla, they're among the Silicon Valley heavyweights, actually traveling to Washington this week for a summit on the role of AI and escalating competition between the US and China. Now, the Hill and the Valley Forum, as it's called, is sponsored by a group of VCs, including Peter Thiel-backed Founders Fund. It seems to be the second iteration, Ed, and still going strong.
I got some deja vu. I'm pretty sure we've done that one before. Let's stick in the world of private markets and venture capital. Renegade Partners, an early-stage venture firm, just announced the close of its Fund 2 with $128 million, bringing the total assets under management to $228 million. Delighted to say we're joined by Renegade Partners co-founder and managing director, Roseanne Winsek. Welcome. You are going to invest in what you're calling durable technology companies. What is a durable technology company?
Hi, Ed. Thank you so much for having me. So when we think about what is a durable company, we're actually looking at, what are markets that actually really matter here? What are markets that are large and still relatively untouched by technology that can support really large outcomes? I think over the past few years, we've seen a lot of software selling to software selling to startups. And those companies have frankly evaporated in this market turn. And so one thing that we thought about a lot in our Fund 1 and we're thinking even more about in Fund 2 are what are those markets that actually really drive meaningful parts of GDP and can actually move beyond trends in venture capital and become lasting companies.
So what is the secret sauce, so to speak? How is it that you're positioned to identify a company that fits that profile and you can go to your LPs and say, we're pretty confident that this fits the thesis?
Yeah, so we're generalists. We're very sector agnostic, stage specific, but we like to kind of look at the market very broadly. So for instance, in our Fund 1, we have companies like aerospace intelligence that sells into aerospace and defense, Copia Automation selling into PLC, right into factories. So thinking about, onshoring and digital transformation there. Companies like Auxilia selling into biotech FP&A, a great way to get access to the beta of that market without actually investing in a molecule or a therapeutic. So we really try to think kind of big tops down and look for great companies that are going after big problems in those spaces.
It's relatively competitive still in the earlier stages of VC. What do you do that makes you stand out, Roseanne? How do you manage to be supporting some of these founders, which increasingly are talking to us about burnout, about worries, about mental health issues?
I know it is, Caroline, you're completely right. It is still very competitive there, even though the market feels softer than it did a couple of years ago. I mean, as we think about Renegade and what we can offer, I always think about you can't beat somebody else at their own game. So how do you play a game that they can't play? Right? We like to focus ourselves on being a very bespoke boutique firm where founders get to work directly with the founders themselves, right? If you are a founder-led business and you're sitting on your board, you don't want an employee sitting next to you. You want another founder sitting next to you. We have really great alignment that way, right? We don't have to worry about job security or, around partnership dynamics because we own the firm as well. We only make 20 investments per fund. That means, only 6 or 7 deals per year. And so we're really spending a lot of time with each and every company and, helping them where they need help and getting out of the way where they don't. We also have a great operating practice where we focus on, people and team. It's led by our incredible operating partner, a woman named Susan Albin. And she really helps our companies think about team org design, structure, compensation, building the hiring and firing machine. And often those are the things that are keeping early stage CEOs up at night because we kind of assume that they know how to build and run a team when often this is their first time.
Yeah, we assume that they can be leaders on the get-go. I'm interested, though, Roseanne, as to how you're helping those leaders and others within those startups to be able to pivot if they aren't an AI-first business right now.
Yeah, I mean, I think there's a blessing and a curse today to being an AI-first business. We've seen a lot of companies that are just, frankly, a thin wrapper on top of OpenAI, and those businesses are not defensible. I think really, first and foremost, you have to be thinking about what is actually driving value for your customer, what's actually driving ROI, what they're actually going to pay for after, the AI innovation budgets dry up. And so, frankly, every company is going to be an AI company. It's just like every company today is a cloud company. We don't invest in companies because they're cloud companies. Every company is a cloud company. AI is going to be the same way, right? So what are those products and services that AI can actually supercharge, that can do, different things than just a great SaaS business that's putting AI into their product?
You heard the story we reported at the top of the segment. Some of your industry colleagues, Peter Thiel, Vinod Khosla, going to DC. Do you think it's the job of VCs to do that?
I think it's important that that Silicon Valley is well represented on the Hill because, frankly, what happens here has a massive impact in the U.S. and in the world, the world in total. And, I do think there is a role for it. We have to remember, incentives drive behavior. So you have to think about what is everyone's incentive as, regardless of what they're doing. But I think it's important that we're thinking about AI, at the cutting edge at the federal level.
Renegade Partners co-founder, managing director, Roseanne Wincek. Great to have you on the program. Thank you. Okay, stick with us, because coming up on Bloomberg Technology, GM rolls out its alternative to Apple CarPlay, but not without hitting a few speed bumps. Who wrote that? That's terrible. Details next. This is Bloomberg Technology.
the latest episode of The Circuit. And Bloomberg Originals host and executive producer Emily Chang, she sat down with the GM CEO, Mary Barra, to discuss, well, why she's continuing to bet big on electric vehicles and autonomous driving. Take a listen.
We're still, as an industry, we're in the early days. I think what we're still seeing is battery chemistry, battery technology is still expensive. And because the vehicle is already a very expensive purchase for consumers, it's continuing to get costs down while we continue to improve the technology.
It almost feels like hype is slowing down. Do you feel like you're battling that, like a sentiment shift as well?
I think it was overhyped, and now it's probably underhyped. Mm-hmm. And the truth is somewhere in the middle. But, again, yes, growth has slowed, but it's still growing.
Mm-hmm. You scaled back some of the EV targets, mainly because of the battery manufacturing issues. Why is that still such a challenge?
We were making something new. Mm-hmm. I grew up in manufacturing, so I feel like we do have a lot of manufacturing expertise. But I think we took for granted some of the newer processes, and we will not do that again.
Yeah. Elon Musk has mocked traditional automakers for how long it took them to get into EVs. Was he right about that?
If I had a do-over, I would have, even though we were moving, I would have accelerated the pace. Hindsight's 20/20.
Tesla stock is up more than 1,300% in the last 10 years. GM is up like 13%. You have met or beat expectations 35 out of the last 36 quarters. So when you look at the stock, does it ever piss you off?
Yeah. It does. I mean, because but again, I can get mad about it and I can be upset and frustrated. And believe me, I have those moments. At the end, it's our responsibility. You can't go home and have a pity party.
Watch The Circuit with Emily Chang tonight at 6 p.m. Eastern in New York on Bloomberg Television, or stream at 8 p.m. Eastern on Bloomberg Originals. Let's stick with GM. The company's eyeing billions in digital revenues with an alternative to Apple's CarPlay, which has become the default home screen of the center console in vehicles ranging from Fords to Ferraris. GM's platform, called Altify, was rolled out, but not without a few hiccups. Joining us now is the author of that terrific deep dive, Bloomberg's David Welch out of Detroit. You paint the picture of Michael Waldron, who's picked up this beautiful $62,000 Chevy Blazer EV. He's so proud of it, and he sits in the cockpit in the driver's seat. No Apple CarPlay. And therein lies the strategy from GM.
That's right. They want to pull people into their cars. And actually, I've driven the Blazer EV. It is quite a good vehicle. Waldron's assessment is right. But they're making this gamble that people will like the cars, get in, and that they can overcome this consumer inertia and just pull people away from CarPlay. And their bet is basically this. CarPlay will project what your phone does, which is music, messaging, podcasts, that sort of thing. But they can do so much more with their own internal system. I like how the head software guy in an interview with me put it from Rivian, said, we don't want our infotainment system in a Rivian to be the same thing that's in every rental car. And GM is taking the same approach with this. But that still means you have to execute a better system than Apple has. And so far, GM's had a tough time with that. The new system, since they brought it back, has had no issues since they started selling it again in March. But it was a very rough start for them. And even after that, if they can build it well, if they can keep the software from being buggy, they're still going to have to get consumers to decide that they don't need CarPlay. And that can be a tough marketing challenge.
Tough marketing challenge, but a lot to be rewarded for when it comes to digital revenue in the future. We can see why they're trying to tussle it out with Apple. David Welch, it's a great deep dive. Please go read it. GM eyes billions in digital revenue with CarPlay alternative. Meanwhile, that does it for this edition of Bloomberg Technology. We've had CEO conversations, we've deep dived into the earnings, and there's more to come, Ed.
Yeah, and you forget that. We have more CEOs coming up 24 hours time in the show. Qualcomm reports tonight. Then you got Apple Thursday. There is so much more still to come. Recap this show, though, it was a good one. On the podcast, Apple, Spotify, and iHeart. And of course, the pod goes on to all the Bloomberg platforms as well. Thanks, everyone, for tuning in. From San Francisco and New York City, this is Bloomberg Technology.